In today's video, traders, we're going to be talking about the London breakout strategy and some effective ways to actually trade this. Let's get into the video right now. Hello traders, and welcome back to another one of my videos. My name is Nick, also known as Trader Nick. I make all sorts of trading educational content here on YouTube for free. All I ask is that you're looking to learn to be a better trader, start right now by subscribing to the channel down below. I've got tons of content here for you to learn how to trade. So today we're going to be talking about one of the most popular topics that I know when it comes to currency trading, and that is the London breakout strategy. What is it? How are some ways that we can actually profit from this concept? Now, I want you to make sure you stay tuned to the end of this video. It is going to have some really good concepts here for you that you really can take advantage of in the currency market. Now, why would this concept be important to us as traders? Now, first of all, we need to understand, well, what are we trading here? What is the London breakout strategy? During the London session, we have the biggest trading volume, right? We have the most volume coming into play in the markets right around the London session. So with that said, how can we take advantage of that? Well, a lot of times what we're going to see, guys, is we're going to see strong breakouts. Why would we see that? Because we have a lot of trading volume, and a lot of times those moves can continue and continue and continue. But we need to understand why this will work for us as a concept. Well, the thing is, when people come into the Forex market, a lot of times it's not necessarily traders. A lot of times it's also kind of just institutions or companies around the world that need to exchange money. So they come to the currency market and they have massive orders pushing all at once on the same direction, right? So if you have US dollars and you need to convert it to pound, right? You might have massive pushes one way in the market that's going to cause the market to extensively move up or extensively move down. And you and I have the opportunity as smaller traders to get involved with that trade and to kind of ride the momentum, right? So there becomes a big wave that comes in the London breakout session. And that's exactly the premise of what we're going to be talking about today when we get into the technicals of this trading strategy. So again, big market volatility, big stuff going on in the market right around this London time. But next up, we need to know when the London session actually is. Now, if you're in the US, this is bad news for you because it's happening in the middle of the night for most of us, right? On the Eastern side of things, it happens, I'm from Atlanta, so it's on the Eastern time zone for me, which is at 3 a.m., which is not ideal for trading. However, if you're on the West Coast, it might be, kind of 12 midnight, which for some people might actually be tradable. Kind of depends your own preference, but again, for us Americans, not the best opportunity, but for people in London, for people in Europe, this is going to come out at 8 a.m. London time. What's interesting here is that this is, a really good opportunity for people who trade in the mornings because you can get into this market, you can get involved, and it's really quick, right? Lots of momentum will come into this market, and there's some ways for us to trade it, which we're going to go into now. We're going to talk about some technicals here on ways you can trade this. What I've got here on the charts, as you can see, I've got an indicator pulled up. I'm going to go ahead and remove that so you guys can watch how I put this on. I am looking at the 15-minute time frame. Now, that is significant. Now, you can use the 5-minute chart or the 30-minute chart or even the 1-hour chart, but I personally, for this particular trading style, I like to look at that 15-minute time frame. Keep that in mind as we go forward. So what I'm going to do here is I'm going to get that sessions indicator on here because that is really, really important to me. What I'm going to go here is on TradingView. This is a free tool to use if you don't know what TradingView is. It's a great way. You just go to tradingview.com. There's some free applications here for your charting. Super awesome tool. Now, if I go in here and I look up sessions, right? What you're going to see here is if I just pull that back up, sessions on chart by this guy right here, AU Rocks AIF. Just click that and that'll go ahead and put that on the screen for you. Now, what this is going to show you guys is it's going to show you there's a green section, a brown section, and a red section. Now, what you'll notice here is that the green section, this is going to be our London session. Remember how I said that for us New Yorkers and us, Eastern time frame people in the US, this night might not be the best time to trade. Well, that's because this red section is where the New York session starts, where the Americans are getting involved, right? So for starters, though, the UK has a head start. This green section is where Europe is getting involved, Europe is waking up, right? The trading session for the London session actually gets started right around this. Now, again, I mentioned that that's going to be 3 a.m. Eastern for me. It's going to be 8 a.m. British time, right? UK time for traders in the London session, right? So it's a little bit better for that particular style. Again, tradable if you like to get up in the middle of the night in America, but maybe not for everybody. So next up, what are we going to do with this sessions indicator? Well, again, this is going to help us identify cleanly, very simply, where this London session is going to take place. Now, what you'll also notice is during the white times, take a look at this, guys. You'll see that the market is not moving a whole lot during these whited out sections. Why is that? It's because it's not during a major market session. You can see this is kind of our London session, and this is kind of our cross between the two, London and New York, and the pink is exclusively New York. So those are going to be your major sessions. That's where you're going to get most of your trading volume for the day, is during these green, and especially during kind of this brown and pink, right? So the London session is going to be the biggest though. This is where we're going to see the most volume traded. So what can we do with this? This is where things get interesting, guys, because remember, we talked about the fact that with the London session, we're going to see markets a lot of times really take off in one direction. Now you can just see clearly from the example here that the market took a turn to the downside, right? We took a really big spike to the downside. Well, Nick, how could we have traded this? How could we have gotten involved short here and rode this momentum to the downside? How could we ride the wave, for lack of a better term? Well, here's what I'm going to do, guys. I'm going to talk a little bit of a technical way that you can get involved with this, and this is exactly how. Now, remember we mentioned this white section here? Well, that was for a good reason. If I get my horizontal tool here, what you can see is that if I highlight the tops of this white section, remember this is our low volatility section, and then when I highlight the bottom as well, this is kind of our range. This was our trading range between the off hours. Now, this is where things are going to get really interesting, guys, because this is where the breakout aspect comes. Remember, a lot of times, if you watch some of my other videos on breakouts, there are concepts that I talk about with consolidation before a major break. Well, a lot of times you're going to see natural kind of consolidation over in between major sessions. So what you can see is we see some consolidation, and then all of a sudden we see this big massive movement to the downside that just keeps going during the actual London session. This is where we're going to get involved, guys, because we've identified that this area, will make it red. This is our kind of our previously major resistance. And this area here is going to be our low of the session, which is going to potentially be our level of support. Now, here's where things get interesting. We've identified this consolidation zone, and we're looking again to ride the momentum pushes that happened during the London session. So here is where we could potentially get involved on the short side. I'm going to get my short position tool here. You can see TradingView has some really cool tools that you can use. And here's what we're going to do with this concept. We've identified the fact that there's a low of this section and a high of this section. And when the London session gets started, we don't want to necessarily jump in right away. We want to wait for the market to make its move, and we want to look to join that move in a calculated way. So here is how we're going to do it, guys. We've identified our consolidation zone. We're going to wait for price to majorly break above or below and close outside of this range that we've previously identified. So if price starts to close underneath, right, we're going to look to sell. If price closes above, we're going to look to buy. And that's exactly what we see happening here. We can see, again, we're on the 15-minute time frame. You can see that right here we get a significant close underneath our level of support. Now you can see we didn't quite get there under on this bar, but on the very next bar we had a big sell-off and we saw a pullback here, and we ultimately closed underneath. This would have been where we want to get involved on a short trade with this particular trading strategy. Remember, all of the concepts that I talk about on my channel are up to you for your own discretion. You can change them as your own kind of preferences, but this is just the way that I like to look at the London breakout. I think this is my personal favorite way to look at it. Now, what you can see here is if I kind of, where we put our stop loss, where we put our target here, this is going to be interesting things to ask, right? So you have two options here. One way to do this is to put it right in the middle of the zone, right? So we talked about this consolidation zone. So one thing you could do, right? Like let's say we measured this. Where's the measuring tool? Well, if you hold shift and press, just a little tip for you guys on TradingView, this will help you measure. So you can see that this range here was just around 29 pips. So let's say 30 pips for even sake, right? So we have 30 pips range of consolidation here. Maybe we set a 15 pip within that range stop. So let's say from our lows right around here, if I could grab it, we'll say that right around there is 15 pips. So there's our 15 pips for our stop loss on top of our kind of our close beneath, right? So that's probably about 20 pips or so. What you can see it right there, 23 pips or so, 24 pips of risk, right? And now what we're gonna do is we're gonna set 2 times our risk, right? A lot of times people talk about good risk to reward. Well, let's use this tool. You can see right here. Check this out, guys. This tool is actually going to tell you where that risk to reward is. So we're going to look for 2 to 1. And what you can see here, guys, is that in this particular example, not every example is going to be this perfect, of course, but this particular example worked out fantastic. So we got short right on the very next bar, right? Price closed underneath this level and we get involved on the very next bar. We go short and you can see price did kind of come back to that level of resistance, which might have been an opportunity to enter as well. Up to you, how you like to trade it, right? That previous level of support became resistance right here. And you can see that price started to crumble down, ultimately filling all the way down to our 2-to-1 risk. We took off 2 times our risk here for a nice profit of, what is that? About 47 pips. Not bad at all. Again, guys, this is a short amount of time. These are 15-minute bars. So you can see that in just a couple bars. How many bars was this? Let's see. That was 10 bars, right? 10, 15-minute bars. We were out of the trade. We're done for the day. Fantastic little trade there on the London breakout, right? Using the momentum of the market, the natural moment that we know that we're going to see a lot of potential volatility in the London session. That's where we're looking to get involved and to take advantage of our opportunities here. So next up, let's take a look at what would have happened from there. Well, you can see we did continue down lower throughout the New York session, and overall, sure, did we leave some profits on the table? Yeah, maybe we did. But that's not what we're looking for, guys. Remember, when it comes to trading, we're not looking to catch every single pip that's out there. We're looking to master one particular thing. Now, make sure you stay tuned to the end of this video because I am going to mention something that can help you out a lot with the London breakout session, because people have this question all the time. They say, well, sometimes the market doesn't continue. How can I increase my chance of seeing that continuation? Make sure you stay tuned to the end of this video because I will be covering how you can improve that particular concept, which causes a lot of people trouble with the London session breakout. Let's continue on to another example, guys. Thanks so much for staying with me. The next thing we're going to do is we're going to zoom into our next opportunity here. Now, what you can see is if we kind of repeat our process here, we'll drag the screen over here. You can see right here, we'll do our process again. Here's where our recent level of resistance is, right? We'll make that red just like we did previously. And you can see right here is going to be our recent low. We'll make that blue just as we did last time. And let's go ahead and clean this up, just get rid of these, just so that's not confusing or in the way. Now what we see, interestingly enough, is you can see that this consolidation zone here has been outlined over kind of overnight slow trading zone. You can see that price is back and forth, and ultimately we did get another breakout of that structure in the very next London session. And you can see this is pretty up to date. You can see there's our most recent candle. This would have been a trade that literally you could have taken, at this London session today. So with that said, you can see it's a pressing topic right now even. So this is something that we see again and again in the markets. We get some really big stretched moves on the pound. And this is going to be all pound currency, by the way, right? Pound dollar is just the one I'm looking at. Pound yen, pound Swiss, all of those ones that have pound in them, you're going to see a lot of volatility in those, and also some of the euro pairs as well. So let's go back to our concept, guys. We've identified our highs and our lows of this consolidation zone. Let's repeat the process that we did last time. This time we see a long example. You can see right here, this is where things get interesting. I'll zoom this back over. Things get interesting right here because we do get a significant close outside of our level of resistance, right? We identified that consolidation zone, and here is where price closed out. So we broke out. This is the London breakout for a reason, right? So price breaks out, and what you can see is that price kept going from there. We did get that momentum push. Let's repeat our process. Let's define our risk first. Let's say, let's see, what we're using our measuring tool. You can see there's about 35 pips. So we'll say right in between that is about, what is that? We'll put 17 pips, let's say. So 17 pips is going to be, well, it's a little bit more than that. Let's say right in between. Let's just eyeball it. So let's say 36, we'll do 18. Let's do 18 pips, right? So 18 pips or so of stop loss. That's where we're going to put our potential stop out if the market decides to roll over, which it will. There's no such thing as a perfect trading strategy, but we're looking to win enough that it outweighs our losses, right? So there's our risk, and let's stick to our plan there with our 2-to-1. Right, so we can drag this up, and you can see, did we get into this one? We just barely made it out alive on this one. You can see that we defined our risk. You can put it right there, and in this particular case, I haven't looked at this before I made that video. That was actually really, really close. We just got out of this trade for a profit there of our 48 pips. So very, very nice trade. We risked around, you can see we actually ended up doing 24 pips. My math must be off somewhere, but you can see our 2-to-1 risk to reward actually worked out. We took 2 times our risk off the table as a reward because we rode the momentum in this market. Now, that's an example, guys, of a buy trade as well as a sell trade. But here's the question for you. How can we increase our probability of success with the London breakout strategy? Now that we have this outline, now that we know the technical breakout standoff kind of concept here, how can we actually increase our chance of actually being successful? This, guys, is where it deviates from the last London breakout session video I made, because I'm going to add one layer to this. We only want to trade the London breakout session. And if you stayed till the end of this video, you're getting the perks here that I didn't mention. So good for you for staying tuned all the way through here. We know that the London breakout session causes some high volatility, but certain things are going to make that continuation happen as opposed to it fade. One of the most powerful ways that I personally think that you can increase your chances with the London breakout session is to tie in some fundamental concepts. Lately, we've had a lot of really intense stuff coming out about Brexit, about news coming out regarding the pound, regarding Boris Johnson. All of these sort of political and fundamental things, they cause fear. What causes a market to move consistently in high volatility and keep pushing? A lot of times it's fear, guys. And that's where this strategy separates itself from kind of just a standard technical strategy. We can tie in fundamentals. So if you have a bias, let's say that you decide overall you're biased short. Let's say you only take trades to the short side on your London breakout setup. That's one sort of fundamental filter that you can add to your trading strategy that you'll want to outline in your trading strategy. Also, knowing that things are more fearful or more optimistic will have an impact on how much markets tend to break out. If markets are breaking out and they're fading really quickly, well, you might be during a time that, overall things are not too scary, people are not too concerned. But if you see big continued movements, a lot of times that's due to the fact that there's fundamentally something that's uncertain about the markets, and we're going to see those big trends tend to work out. I think that this is going to massively increase the overall percentage gain or percentage win that you're going to have using this particular trading strategy. As always, there's no such thing as a perfect strategy, but there are ways to optimize and to make your strategy more effective. And I think tying in some fundamentals with your breakout strategy might be a fantastic way to do it. Guys, I hope you got something out of this video. I have more videos. In case you want to watch the old version of this video, you can do that here. Thanks so much for tuning in, and make sure you give this video a thumbs up and also check out some of my other videos. Thanks so much, guys. We'll catch you on the next one.